Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. It is March the 11th. Hope all is well for you and yours. Let's see what we've got going on today. Quick reminder, everything we do here is for educational purposes only, not intended as investment advice. So let's move in the markets. Well, the markets sit just below their record highs. We've had a couple of days of the markets actually moving a bit lower for no particular reason. We've got CPI numbers coming out tomorrow. Might be causing a little trepidation, kind of a wait and see, afraid that we get a hot number and everybody starts panicking about what the Fed will or will not do. We'll see. Crypto stocks are rallying. Makes sense. Bitcoin over 71,000. By the way, there is a Bitcoin trust, GBTC, if you're so inclined. I don't know if at these levels it's a time to jump into that. 10-year Treasury is steady, around 4.1, and oil down a little bit, 77.53 a barrel. What to watch this week? Nothing going on today. Tomorrow, I told you it's the CPI number, core CPI, year over year. We're expecting it to come in at 3.1%. Nothing scheduled on Wednesday. Thursday, retail sales. Producer price index, which is the wholesale version of CPI and the core PPI. Initial jobless claims will be coming in as they do every Thursday morning. Business inventories. And Friday, we get the Empire State Manufacturing Survey. So, the real market movers, that'll happen Tuesday and Thursday of this week. Last week's heat map, not so great. Some of the real movers were down. Lilly down almost 7.5%. Costco down pretty big. Broadcom down almost 8%. Tesla 5%. And there's NVIDIA. NVIDIA's pulled back a little bit in the last couple of days, but for the week, they were up 3.56%. Energy stocks also had a decent week. And the 1-year heat map, there's your big winner, NVIDIA up 276%, Broadcom 107, Microsoft 60, Alphabet 50, Meta 169. Look at Apple, up less than the S&P 500 for the last 12 months. 14.56, Amazon 87.59, and Tesla for the last year has given us a checking account return, 3.48. And the financials typically in the 20s most. Berkshire Hathaway B shares, 32%, Visa, 27, MasterCard, 32. Energy hasn't done anything for a year or so. Look at Lilly, 131. Market breadth, we like to look at new highs versus new lows. So on the NYSE, 590 to 78, fantastic. On the NASDAQ, 663 to 288, also just great. Biggest winners on the week, Hewlett Packard, Kroger, all these announced earnings, Dexcom, FMC, Target. Target was up almost 10%. Zion, Citizen Bank, Moderna, Edward Life Sciences, and Reamed. So the average 10-month price returns after the S&P is up in both January and February. The NASDAQ up 20.7%, the S&P 12.9%. Not bad. And In sub-industries, home improvement, biotech, home building, I wouldn't play any of that just based on this. But, I kind of look at all of the data. This market ought to continue to move higher. We have an election coming up. Fed's going to be cutting interest rate increases, basically an impossibility at this point. Um, Earnings are moving up. It's everything we could possibly want. VIX is on the move. That's volatility index of the S&P 500. It is starting to move higher. We still got room to run in this bull market. Current bull market is about half of what previous bull markets have been since 1949. I mean, there's a lot of data points in this. Magnificent Seven. So you can see what they did in 2023. Then come over here and look at 2024. Tesla down 24%. Apple down 9%. Alphabet down 5%. Everybody else pretty solid. Microsoft up 10, Amazon 17, Meta 41, and NVDA 72%. Weekly fund flows. So we have money flowing into stocks, but out of tech. People are feeling like, the prices might be too high. I just keep riding the winners. NVIDIA. So I told you they've had a couple of days where they've pulled back. Well, their cash flow is just going to be enormous through 2027. I'm not worried about them one little bit. A lot of dry powder in this market. 1.3 trillion has been added to cash versus equities, which lost 10 billion. And 145 billion went into bonds. So that is the dry powder moving forward. As interest rates come down, that money's got to go get employed somewhere. Total in money market funds right now, over $6 trillion between the retail and institutional investors. I wanted to debunk a myth, which is, the wealthy don't pay any taxes in this country. Only ignorant people make that statement. The top 1% pay nearly 50% of all the taxes. If it wasn't for the top 1%, we'd have no economy in this country. And it's just always interesting how there's a big group of people that want to vilify the high achievers as if somebody just handed us something. No. Most all financially successful people I know work 2 to 3 times harder than people who aren't financially successful. That is just a reality. They are more educated, which means they invested more in their schooling, went to school longer, work longer hours. You think success just happens by accident? Nope. But again, I keep hearing about, we've got to get the wealthy, that's part of the big campaign issue right now, to pay their fair share. Well, when 1% is paying half the bills in the country, if that's not their fair share, what is it? And in earnings announcements this week, I don't know that any of these, frankly, are going to be market movers, but we'll see. It could be the cumulative, effect. A lot of retailers announcing just like last week. 1-year returns. Communications back on top, 59.39% for the last 12 months. Technology close behind. Discretionary's done great, up almost 35%. Financials at 23%. Boy, they've come a long way. Industrials, 22.36. Healthcare, 17. Materials, real estate making a move. Staples and energy, the only one that's down is utilities. It's ironic. Utilities is where people go to be conservative. It's the one that's lost money. All right, let's take a look at the charts. see what they have to say. We'll look at the S&P 500. The SPX would be the proxy for the S&P 500. We look at that yellow line. That is the 50-day moving average. It is a thing of beauty. Definitely bullish. And we are above. We've had a little bit of weakening here recently, but you're always going to have that, right? I mean, look, market goes up, comes down, goes up, comes down, up, down, even in a bullish market. How are we looking on the Qs? So this is big tech. Same kind of scenario. Got the 50-day heading higher. We're well above it. And what about the Russell 2000? This is small cap. So it has ridden its 50-day up, and it's nicely above. It's not nearly as bullish as the other indexes, but it's definitely made a good move so far this year. All right. Well, there we have it, sports fans. Thanks for hanging with me for another week. I will see you again next week. Until then, be blessed. Bye for now.